Welcome back. As we saw, U.S. futures contracts, at least two of the big ones, are slightly higher today after yesterday's major sell-off, particularly in stocks exposed to artificial intelligence. Our next guest says yesterday's sell-off was a knee-jerk shoot first, ask questions later scenario. Let's bring in Tyler Ellegard. He's portfolio manager at Gradient Investments, and he's our first guest this hour. Tyler, thanks a lot for joining us. How should investors be thinking about the big sell-off yesterday in terms of valuations of those mega cap tech stocks, in terms of the longer-term future of artificial intelligence, and in terms of asset allocation, how much of your portfolio should be exposed to this sector?
Yeah, I think as far as yesterday goes, I think it's, as you said, it's a knee-jerk reaction. I think from a longer-term perspective, AI is still going to work. It's still going to be the driver of momentum for the stock market, for the economy, driving efficiency. So we don't have any concerns. It's just DeepSeek changed the game for AI at the moment. And, you know, whether that's good or bad, obviously we saw the downside of it for the US-based companies. But I think generally speaking, the US AI companies, NVIDIA's, AMD's, Broadcom's, Oracle's, I think all of those companies are going to be just fine in the long term. But it was just a knee-jerk reaction yesterday. But as far as how much should be allocated, we've actually been trimming back our positions in NVIDIA and some of the big AI names, taking some profits. We've known that there's going to be some potential competition coming around the corner. We didn't expect it to be yesterday, but we saw some type of competition coming because it tends to flow in that direction when money's there. So we've been trimming back our position, and we think that's a prudent part of managing portfolios and for anybody to do in general.
Are these stocks buying opportunities now? NVIDIA fell by 17% yesterday. It's the most high profile of the bunch. We get many questions from our viewers on this stock. The nature of the questions tend to be, have I missed the rally? Is it too late for me to buy? So the question looks different today than it did yesterday. Also, stocks like ASML and, as you've noted, AMD are about 6% cheaper today than they were yesterday. Are there opportunities here?
Absolutely. I think, yes, the way DeepSeek is creating their models and the chips behind it is very different than what we're seeing today with the Metas, the OpenAIs, Anthropic. So I think there are going to be some winners, there are going to be some losers, but I would say, generally speaking, companies are still going to want to use the NVIDIA GPUs. Now, maybe NVIDIA's margins come down slightly because there's no longer the pricing power. But I think over a longer period of time, because we still think AI is going to be the driver of our economy and the stock market going forward for efficiency purposes, I think all of these names, I think you have to choose them. But I would say, generally speaking, AI companies are a buying opportunity today.
One stock you like in the tech sector is Oracle. Remind us what its AI exposure and involvement is, and why do you like Oracle in particular?
Yeah, data centers in general, right? So I think when you think of Oracle, they are tied to NVIDIA and capacity, NVIDIA chips and capacity, and they're investing another $500 billion or so into AI infrastructure. So I think the future for them is still there. Now, maybe there's some short-term headwinds here with the recent changes, and here's the other part of this is we have no idea how these other companies, OpenAI, Metas, Microsoft's, Amazon, we have no idea how they're going to adjust their models and how they're going to adjust their chip usage, if they're going to change chips, if they're going to continue trying to push all their chips into the NVIDIA chips. So a lot is still unknown. And so if we're just going on what we know today, Oracle and the data centers and the investment that they're continuing to make and the capacity that's there, Oracle, I think, is still a longer-term winner here.
You also like Netflix. That company caught a lot of attention recently by adding nearly 19 million subscribers to its customer base in its most recent quarter. It's soon going to, I believe next quarter, it will cease providing subscriber numbers. But the stock trading at its highest level ever as of right now. What are your views on Netflix?
Absolutely, we still like it. I think the biggest tailwind for the company now, and we've seen some hiccups along the way with this, but it's live sports, right? That live sports is going to be a game changer for Netflix as they continue to evolve in that space, and they're going to continue to grow in that space, and so that's going to continue to drive their subscription growth, and then they also have pricing power, right? We're seeing another increase in prices here shortly. They have that pricing power, and it's, if from the people that I talk to, if anybody's going to cancel streaming services, Netflix seems to be the one that they keep. So I think from a winner standpoint in the streaming space, Netflix is number one, and the live sports is going to continue to drive those subscription growth for the foreseeable future for this company.
Okay, and in a completely different sector, Walmart, the giant of the discount retailing world, and a stock that has outperformed in a big way for a good couple of years now, is another one you like.
Yeah, I think Walmart has been a surprising story, right? When you compare them to like a Target, which most people compare those two together, it's a very different story. But I think what's interesting about Walmart is their Walmart Plus that continues to drive another subscription growth for the company. But it gives them, it's not going to be the main source of revenue for the company in that aspect, but it's a consistent stream of revenue for them. It's growing quite consistently in the low double digits right now, and then it also caters to the higher end income threshold or the higher middle class income threshold as well. So those types of income classes tend to spend on higher margin goods, and so if Walmart can continue to cater to those income thresholds on the higher end, I think this company can continue to perform well, margins continue to do well, and so we still like them here.
Do you like Costco? Similar market, and also a very successful stock.
Yeah, we do. Costco is another one that we put in that camp. It seems like people on my portfolio management team, my colleagues, they tend to go to Costco every day. So as long as I see that, we'll continue to like Costco.
Okay, let's finish with your view of broader markets. What kind of year are we going to have in markets? Many of the very impressive year-to-date gains that had acumulated vanished yesterday. What are your thoughts on where we finish this year, broad market-wise?
Yeah, I think it's going to be a choppy year. We're seeing it yesterday, but I think if you peel back the curtain on the S&P 500 and look at like the equal weight version of the S&P, it almost finished flat yesterday, right? So there's other areas of the market that will continue to work. It's just that the market is so top heavy right now with the AI specific companies. So I think from a broader perspective, we're going to see some choppiness. I do think the market finishes the year higher, not by much, but I think we do finish the year higher from where we are today.
Thanks a great deal, Tyler Ellegard, for your insight.